Welcome back, everyone, and thank you again for staying with us. This morning's final panel discussion will explore private equity funding. On our panel, we have Ms. Maria Daniel, Partner Strategy and Communications, Instant Young Services Limited, Mr. Mark Jardine, Board Director, Export TT Limited, Mr. Richard Lewis, Chairman and CEO of the Label House Group Limited, and Christopher Bodu Singh, CEO of Cocoa Republic. This session will also be in the capable hands of Dr. Kieran Swift, who will moderate this session. Kieran?
Thanks, Mandisa, and thank you to Richard, Maria, Chris, and Mark. I think we're going to just jump straight into it. One of the terms that isn't used enough when people talk about innovation is patience. It takes a lot of patience to take an idea, turn it into a venture, and turn that venture into an actual successful business operation. So angel investment is typically considered a good source of patient capital. So Richard, you have been part of a business angel investor network here in Trinidad and Tobago. Around the same time, similar networks, similar groups are set up in Barbados and Jamaica, but some of those other groups seem to have had more success in terms of the deal flow and the deals being struck. Can you describe for us what are some of the major challenges and successes that your group has had and what you might recommend based on that experience to turn some things around?
Good question, Kieran. Good morning, participants. Can you hear me, Kieran? Correct?
Yeah,
okay. First of all, let me try to let the participants know how I look at angel investment and angel investor and the difference between like a new company, venture, and innovation-driven startup. An angel investor, and by extension, an angel investment is different from seed money, venture capital, crowdfunding, in fact, even money from an incubator. In fact, angel investors is not even an angel group by distinction. These people have an incredible amount of disposable income, apart from maybe some of us in Trinidad. Experience in the industry and normally a portfolio of startup investments. They, as you said, are known as patient investors. So this kind of then clarifies what they invest in. Obviously, innovation-driven startups are not average new business. The people in these startups are developing new markets, they're developing new products and services for which sometimes there's no market or even need compared to an entrepreneur starting a new business venture. So very quickly, what are these angel investors looking for? And this is in lead up to what your answer to your question is. Angel investors are normally looking for a solid return. Some people say seven times in 7 years. A good reason to invest, obviously, economic side of it. We're talking about something new and helping his or her community. A solid management plan, a solid management team, a business structured for investment, in particular structured for equity investment and less control by a founder, and the opportunity to be actively involved with their time and seeking new knowledge. That is the investors. And obviously, most importantly, at this stage, a viable exit strategy, which has options with risk analysis and everything like that. Angels, it is said, don't fly solo. That's why there's so many angel groups and networks in the world and in the Caribbean. I know there are 2 in Jamaica, 1 in the OECS, 1 in DOMREP that I know about, 1 in Barbados, and 2 in Trinidad. By far, the most successful are the Jamaica networks. I'm not that familiar with the Dominican Republic, but I'll have to say that the Jamaica networks stand out in the Caribbean. And in particular, the First Angels, led by who I always say is the regional guru on angel investing, Sandra Glasgow, who is First Angels Jamaica. They have 16 investments in their portfolio and 30 angels in their group. Very formidable, very successful to date. So why is Jamaica and maybe even OECS or Barbados more successful than we are in Trinidad and Tobago? I polled my group, which is the Renaissance Angels, on the question, Kieran, you're asking, and here are some of the answers. First of all, the Jamaican economy generally is a much different one from ours, where for the past 20 years, the private sector in Jamaica has been the driving force rather than government. And we all know that the Trinidad and Tobago government, the spend has come from, driving the economy has come from oil and gas rents. So private sector in Jamaica, even in the worst economic times, was very innovative, especially in the area of finance and technology, as it applied to services, because of course they have moved from a commodity based many years ago in bauxite to basically services, and in particular the service of tourism, and now very much in logistics. A large portion of these solutions were homegrown and today form a large part of the Angels portfolio and the Jamaica Junior Stock Market, which, by the way, is looked at as a huge success for new listings which offer a clear exit strategy. The government and private sector in Jamaica, in my opinion, invest heavily in entrepreneur development, and we in Trinidad, basically public and private, just do not. 2, trust. Trinis, by nature, do not trust each other in business. And this trust is critical between investor and investee when it comes to this type of patient capital. There's always a feeling, no matter how deep the NBA goes, that the idea will be stolen by the investor. 3, most of the startup founders in Trinidad have great ideas, but no implementation plan. And someone in our group said, well, this is just part of our culture. Everything in Trinidad has lots of ideas and very few being implemented. 4, most of the founders in Trinidad see this as a lifestyle business. And what I mean by that is something that they will be working for that business for the rest of their life and even bringing their family as they go along. Whereas generally, globally, angels don't invest in lifestyle businesses. And they also think the investment is a gift somehow. And the time given by the investor is just what they call giving back to society. And as a result, there's no clarity in utilization of the capital. Most angels also are not really suited to be angel investors. And this we have to admit to ourselves. And we really don't get involved in the coaching and shepherding that we should, when the coaching and shepherding is more valuable to the investment than the money. It's very hard to change that. That's why investments are usually form something like an investment club and not an angel group. So what to do? 3 things, just offhand, in the time frame we have. 1 is I think we need to encourage the formation and operation of a Caribbean entrepreneur network. There are lots of Caribbean angel investment network. There's a lot of stuff in that area going on, but there is very little, at least what I know, around the Caribbean entrepreneurial network, where the investment will be to grow the people in the network. And because of that, they can push out the deal flow as opposed to the other groups which are pulling in the deal flow. I think we need to widen the Jamaican stock market to a Caribbean stock market, junior stock market, and use the successes of Jamaica to be able to model it along those lines. Lastly, I think we need to make all efforts to change the mindset of the TT, young entrepreneurs, to one where the efforts in new startups are not just Me Too business, what exists today here, but look for real innovative trends globally and use that for guidance. So that's my contribution, Kieran. I hope that helps the participants to in the kickoff of where we're going with your last section on alternative financing arrangements.
Thanks a lot for that, Richard. Definitely a strong kickoff there. You probably hit that ball all the way to the goalpost on the other end of the field. So with that, I want to, at this point, bring in Chris Buddha Singh. Is he still with us? Yeah?
Yeah, hi, how are you, Kieran?
I'm doing well, Chris. Glad that you could join us. So it's interesting because in the first panel, your company got a little shout out, a little big up from Chris and Mirage at Export TT. And obviously, Cocoa Republic has been distinguishing itself as a world-class chocolate maker. You have the awards to prove it. Now, your business is centered around cocoa and chocolate, based primarily on the Trinitario variety, which is indigenous to Trinidad. But the talents and the skills and the expertise and the finance that you would have used to leverage to get your company to where it is and where it is continuing to go would have also come from outside of the country, from foreign sources. So tell us a little bit about that journey of how you've identified, how you've accessed, how you've been able to secure deals with foreign private investors.
I'll be honest with you, regarding foreigners, I didn't really get too much success outside of the country. The number one reason at the time was, many foreigners were skeptical about investing in Trinidadian equities. So they didn't like the legal jurisdiction that, the company was held under, requesting that I move the company to America. And obviously I would have lost the story if I did that, because the story is about this homegrown cocoa that's grown here and handled here, and so at the time it wasn't an easy move. Most of the foreigners I did get were due to networks and friends. Like I'm talking about institutional. I went after some institutional big VCs, right? And those guys were love the product, love the idea, love the innovation, but needed the corporate structure to be set up in America. So that was there. It didn't cross their list, right? But the people that bought into me were more like friend and family kind of situations, some of which had some kind of Trinidadian association, maybe a relative or spent some time here at some point in their life,
Thanks for that, Chris. So just to follow on that quickly, how has that experience then shaped your company and shaped the approach to what you do?
We definitely did set up a U.S. entity later on. We recently set up a U.S. entity, and that does handle all of our U.S. Operations, and we're driving a lot of the revenue through that company before it's sent home. So, increasing the value and the KPIs on that entity is now something that we're doing moving forward. And now that company there's a much larger appetite for people that want to buy into that entity. Unfortunately, our position, we don't really need capital anymore. So, it's sad how things work. When you needed it, no one wants to give it to you. When they want to give it to you, they don't really need it anymore. But I guess you have to be innovative to be able to see those things before it happens and catch them before the window closes. And yeah, so that's one of the moves we definitely made. We definitely set up a structure in America, and we're right now navigating the various, options that we do have of how to handle business in America.
Thank you, Chris. I'm sure some of the persons in the audience, the virtual audience, may want to follow up to you to better understand, how you navigated those transitions. I want to shift at this point to bring Mark into the mix, because obviously we're talking here in this segment about private finance for innovation, but a lot of the common thread that has been coming through in the conversation, not just in this panel, but the previous ones, focus on a lot of the work that smaller firms have to do before they're even ready for finance and before they're even ready to connect with investors. And one of the ways in which they can do that is by participating in global value chain, being suppliers to much larger companies. So Mark, I know that you, having worked at Blue Waters, and Blue Waters being a large beverage manufacturer, you all do work and have worked with many smaller agricultural producers, right, that are in your supply chain. So what are some of the challenges that those small producers have had, and what specifically has Blue Waters done to help strengthen those relationships and get those smaller firms into a better position?
Hi everybody. Really and truly, when you're looking at these producers, it's primarily farmers, correct? And you have a lot of hurdles out there. The primary one being capital. It's hard for them to access even debt, really, because you have to have your back office in order. And this goes for everybody. This is not for producers or manufacturers. This is even for farmers. So if I were to look at a small farmer and decide, all right, this is a really good product, I'd like to carry this further down the road, I would want to know, all right, who am I dealing with? What controls do you have in place? You know, just to get a good idea. But I mean, in my previous iteration, I was a banker. Now return the bank. I'm no longer at Blue Waters. So you have that mindset, right? That formality where you need to see things in a certain way. You need, and you guide these producers, these farmers, to speak a different language. They can have the best product in the world, but if they can't articulate what they want to do, what they see, what they have, and where they want to go, it's difficult. So if they don't encounter that help through a financial institution or an advisor or something like that, it's hard for them to really go a little further. So, I mean, what we did at Blue Waters is really take some of these producers under our wing and enter into a couple different arrangements. So offtake agreements. So we would work with you, ensure that, all right, this is your growing area, this is what you're doing. We will look at offtake agreements with you because we need this product and we can add value to you. We will also look at capitalizing some producers directly, right? So we would go into an agreement where we see somebody producing, let's say, good quality organic fertilizers. So we would say, all right, we capitalize the entity and we'll do a profit share. Because a lot of these guys, I mean, fantastic minds, fantastic people to work with, but the money is just not there in their forum. So you bring it there and you enter into a formal profit sharing agreement with them. And it works really well because you build scale, you build scope, and you teach along the way. So they teach you the technical, you teach them the business, right? So something that a lot of people in these realms forget is branding. If you don't brand your agricultural produce, let's say, it just gets lost in a whole rush of product that you see in the various markets and stuff like that. So you can add a lot there by branding and also building, I guess, a very reliable supply chain. So you ensure, right, I get X amount of products every week, and then you can really access a lot more, a lot better market at a better price, working through NAMDEVCO, supplying straight to PriceSmart, to True Value, and you build off of that. That's value that you would not have seen before. That's profit you would not have seen before. So entering into this sort of formality with them,
like Mark dropped off there, was dropping a lot of gems, but he seems to have lost the connection. Not a problem. I think we got a lot of value out of what Mark had shared. And with that, you know, we saved the best for last. Maria, I want to come to you now. So you've been leading the strategy and transactions practice at Ernst & Young. And I imagine in that role, you've been sort of front and center for helping to structure some of these very arrangements, well, not those exact arrangements, but those types of arrangements that Mark was referring to help small firms really get prepared for interacting with larger firms, get them ready for private investment. You've also been involved in Planting Seeds, the investment TV show we're all aware of. So Richard, Mark, Chris have spoken about some of the pitfalls that these smaller So for you, Maria, what is one sort of out of the box or not typical approach that you might propose to make more private finance available for innovative business ventures?
Morning, everyone. Thanks, Kieran. I mean, listening to all the discussion, and I certainly don't want to repeat, but I think, you know, Mark, just continuing your conversation, because I think Mark brought out at the end there, before you dropped off, some of those innovative solutions. So, you know, when we talk about out of the box, sometimes we don't look in the box to find that out of the box solution. So, I mean, part of what Mark was talking about here, and Chris has even done it in his own business. So I have the pleasure of meeting Chris in our Entrepreneur of the Year program and getting to know a little bit of what he has done as well. And when Mark talked about, you know, using your client effectively, Blue Waters is buying from them, but also financing them in a certain way by taking an offtake agreement, you know, working with your client and saying, let's do something together, let's do a joint venture. I will ensure that you get the product. So it's also the entrepreneurs working together. And I think this point was brought out before. One of the things we don't do enough is use each other or that whole entrepreneurial network. Because remember, what you need is funds, right? Because you want to get the revenue. To get the revenue, if you have more people giving you that revenue, your dependency, and Chris could talk about it, you know, his dependency, he's saying now he really doesn't need the capital because he used his connections, he used his friends and family, he used other suppliers, etc., to help build his business. So when we talk about out of the box, sometimes it's right in front of us. Entrepreneurs coming together, selling to each other, financing each other, getting those big businesses, those big customers to almost help you finance upfront. Pre-sales, there's a big, big value in pre-sales. You know, going out there, selling your product, and this is where the branding comes in. So Chris has done very well of being very true to his brand. You know, you don't even need to explain what Cocoa Republic stands for. Anybody who has seen his product. Blue Water, same thing. So when you build that brand strength, that in itself is financing. But I want to talk just a few minutes on the Junior Stock Exchange. So, you know, Richard raised about Jamaica, and I have to keep, you know, we keep going back. Jamaica is doing it. Jamaica is doing it. Why are we not doing it? Jamaica Junior Stock Exchange has over 40 companies on it. And some of those companies have been in very different industries. I know one that was in the music industry. They've raised from a couple $1 million to much more than that. They have, I think their capital is way in the billions now of Jamaican dollars. And their entrepreneurs are willing to put themselves out there. They're willing to take the risk of sharing their business plans, sharing their story, sharing their businesses to have a smaller piece of a much bigger pie. So when we're talking about financing and, you know, listening to this all morning, money is there, right? And when you go on a junior stock exchange, you learn how to operate your business. And one of the speakers said it in a way that you should be operating anyway. So the junior stock exchange, the government has now put even more incentives. So not only is it making it cheaper than debt, because now you have it tax-free, you have access to patient capital. You started, Kieran, at the beginning of this segment talking about patience. And, you know, I saw in one of the questions, somebody was asking, how can you put this in layman terms? So equity is really about giving away a piece of your business. And what you do is share the profits in as layman terms as you could put it. Right? But of course, for somebody to invest in you, Richard mentioned trust. They have to trust that you can take this business where it's going. Right? You have to have proper financials. There's no one that hasn't spoken about financials. I know from working with Chris, Chris knows exactly how much it costs to make each one of his products. And, you know, it's using different strategies to build a business. Chris uses contract manufacturing. Blue Waters know about contract manufacturing. So, you know, you have to think of how do I get my product out there? It doesn't mean I need $100 million to start the business, but how do I generate the business? How do I generate the revenue? And how do I really get that story and branding out there? So not only could I go on something like the Junior Stock Exchange, making my debt structure looking even better. And I mean my debt structure, my corporate structure looking even better. So then I could go and harass the banks, right? Because the banks are not patient capital. They've been very patient in COVID though, but you know, they're usually not the most patient capital. And here we have the Junior Stock Exchange available to us with tax incentives, which will help you run your business better, yet no one is coming to the party. Chris Boodoo Singh, I'll put it out there to you. Put your business on the Junior Stock Exchange.
Yeah, I've considered it. I've considered it already, trust me.
All right, thank you, Maria. Mark, you dropped off there.
Yes, sorry.
Take this opportunity and finish it. No, it's cool. You want to finish your point?
Yeah, no, I mean, it just really, I think Maria covered a lot of it there. Access, when you're trying to access capital, however patient, or I would say impatient as she said the banks are. You really have to have your books in order. You have to have things in order, because trust me, if you cannot tell the story properly or things aren't clean and transparent, it's going to cost you more. It's going to cost you in time. It's going to probably cost you on the interest rate and or the the rates an investor would want to get from you. So if you have your story straight and you have your things in order, it really is a much easier drive for everybody. So you can get to your goal a lot quicker. And that's really it. And it's really building that comfort and that confidence. I mean, simple things. Use your technology. I mean, what Chris would do, have advertising on Instagram and everything. It's fantastic. And you're now seeing farmers doing something like that. The agricultural side of things, even the processors, the agricultural processors and stuff like that. And that gives a lot of credence to them. And people reach out to them, because before you would just think a honey man is a honey man, all right? A coconut water man is a coconut water man. And it's not like that. You build your brand. And
it's cheap to do that. I'll jump in there for Mark again. And it's cheap to do that, right? So social media has made marketing so much cheaper. Somebody mentioned this morning, oh look, you're back on. Mark, I keep filling in for you.
No, cool. Yeah. No, and that's that's it really. I mean, we need to build it, and we need to put some formality in the structure, and everybody will be comfortable along the line. Yeah.
I think social media, if I just add, has really leveled the playing fields for SMEs. Right? So there are so many businesses that you never knew about that Instagram and social media. I mean, I keep seeing it, whether it's the small bakers, in the food, everything. You have all these SMEs who are really self-financing because they're getting their product out there. They're getting their name out there. They're building their own brands. And when you want to talk about financing, branding is really key to it. Mark said it more than once. You are building your name, and that is what someone is financing. So whether you're looking for equity or you're looking for debt, the investor is investing in the person more than anything else. And what they want to see is that they understand what branding means. They understand what the business means. So we have to start thinking about, when we think about financing, it's taking some responsibility of getting access to that financing.
I think that's an excellent point to end on there, Maria, as we now head into a Q&A. I noticed from the chat has gone kind of quiet. So I don't know if the four of you have been so comprehensive, people don't have more questions. I am seeing one, and it's a question I'll throw out to anyone on the panel. Is mentorship available to provide guidance to these entrepreneurs and small businesses to help them reach the point of being ready to interact with investors?
Yeah, well, I mean, I could start off there. I mean, at EY, we do it. We try to do it. We obviously don't give the EY fees to small entrepreneurs. But I mean, our part in planting seeds have really been to do workshops about business plans. Careery does a lot of mentorship as well. There are many places that offer mentorship, but I could tell you from even my own experience, when you want mentorship, be prepared to listen. So I work with a lot of young entrepreneurs. And yes, determination is really important, etc. But you also have to be wise enough to listen to good advice. So what I find sometimes is we do give advice, but they're not listening. They're not listening. So understand, if you want mentorship, you also have to get in a frame of mind of listening.
Richard, let me bring you back in on that point as well. I know you and I have spoken about that before. Yes.
You're on mute, Richard.
Muted.
Oh, he just.
Sorry, Richard, try it one more time.
Yeah, you hear me now?
Yes, loud and clear.
Yeah, the whole point about the mentorship and that type of stuff comes back to my point earlier on, that what we ought to be doing, quite frankly, is training the entrepreneur. We need to shift from training the angels or the investors to start training the entrepreneur in a real way, along the lines of a lot was said in this meeting. I mean, I do coaching at the moment for couple of companies through my action coach, that I do. And I'll tell you something. The fact of the matter is, a lot of the people that I'm coaching outside of that, with the new ideas, somehow the not old, but the present, the present things that we as coaches think about don't apply many times to these ideas and innovations that these people have. It's not just providing the what we understand as the best way to run a business or to grow a business. We need to understand the kind of businesses that these people are going into and why. Because when we think they're not listening, a lot of times is because we're not speaking the language that they that they should be, that really and truly applies to what they're doing. Let me put it that way. So that's just my contribution there, Kieran.
Thanks, Richard. That point, and as a point that Mark made earlier about speaking the right language, because without that common language being shared, whether it's between an entrepreneur, an investor, a mentor, so on, the point simply won't get across. I'm seeing a few more questions now coming into the chat in the couple minutes that we have remaining. Are there any, and this is perhaps it might be best to start with you, Maria, but are there any free tax advisory services? Business in their experience, it can be quite costly to fix the tax problems if things aren't filed properly the first time around.
Good question. Let me not put my tax department at any risk here. Not that I'm aware of, but what I would tell you is actually tax services are not that expensive.
Now it seems like the internet thief has stopped at Maria's place. So, okay, now you're back, Maria.
Oh, okay, sorry. No, what I was saying is, getting tax advice is not as expensive as people think it is. And, what the Board of Inland Revenue has been open to, of course, is to try and just get people in the system. So, my advice would be, try and get it in order. Talk to the Board of Inland Revenue. Sometimes they are willing to waive to just get people on board and in line as much as they could. But the longer you leave it, is the worse you're going to be.
Thank you for that. I think probably we have time for one last question. And Chris, I'll shoot this one to you. Inquiring minds want to know why you haven't used the second tier stock exchange.
I don't even know what that is.
That's the junior stock exchange that I just said you should put your company on.
Oh yeah, well, we only spoke about that recently. I didn't even know that existed.
You see, and for everybody out there, it's tax-free concessions now.
Correct.
All right. Mark, any final words?
Kieran?
Yeah, Richard, go ahead.
Just, I would like to throw in something quickly for Maria. Maria, many years ago when they tried the venture capital fund on the stock exchange for the very first time, I remember telling the minister at the time, I would say about 80% of the people who have existing businesses that want to go on that exchange very likely have a tax problem. But it's kind of standard, right? They probably have not been paying all the taxes supposed to, et cetera, and there's a warranty and representation side to listing on a stock exchange. And I'm just wondering whether they have had any consideration, at that time they didn't, to what could be considered as a tax issue that you buy shares in this company, and 2 years down the road you find out that they do an audit of past years and you now have something. So perhaps one of the things that could be a big challenge, and people don't even think about it on behalf of the business owners, I can't go on the stock exchange because I have not really complied with everything 100%, and I don't want to have to deal with this going forward. So they need to have something to help that situation. I just
appreciate that, Richard. I know that you were throwing that one for Maria, but I have also that digital alarm bells going off here that we are out of time. I do want to thank
Thanks for saving me, Kieran.
and just saved by the bell, as it were.
Saved by the bell.
Thank you all panelists for a really insightful and informative session. I'm sure, well, quite a few people have been asking for your contact details, so feel free to leave them in the chat. If not, I'm sure Export TT will be able to pass on that information. And with that, I will hand back to, I believe, Lisa or Mandisa.
I'm here, Kieran. I just want to say sincere thanks to our entire panel for bringing this key information to our audience. So often we think only of the beaten path and forget that there are many other ways of making our dreams a reality. And also, very importantly, for telling us concretely how we can best ready ourselves to take advantage of the opportunities before us. So thank you, Dr. Swift, for so expertly guiding this discussion and for supporting Export TT in our goal to stimulate and support innovation rather. And to our participants, I say thank you for staying with us. I know it was a longer session than usual. And for your active involvement in the Q&A, it really helped create a live, rich discussion that I think we all benefited from. And at this point, I would like to welcome Ms. Lisa Douglas-Paul to deliver some closing remarks. Ms. Douglas-Paul is a business advisor within the Services Export Unit and is the key architect behind this morning's session and indeed this entire seminar series. I hand you over to Ms. Douglas-Paul.
Ladies and gentlemen, this brings us to the end of this session, as well as the entire Innovation Seminar Series. Through all 3 sessions, we sought to examine the critical junctures of the export planning process and guide you on how they can be tweaked at each stage to ensure that your business continues to grow and thrive in the pandemic and post-pandemic period. Through rich discussion witnessed here today, we have learned that there are so many avenues available for financial support during this challenging time. There are loans and grants being offered through local and international institutions, as well as support from the private and public institutions alike that can help you finance your ideas and convert them into tangible benefits for your company. We encourage you to review the existing suite of services shared with you here today by visiting the websites of the various organizations and emailing the panelists that have shared their contact information within the chat. We at Export TT stand and remain ready to assist you on all aspects of your export journey, whether it be to develop your export plans or to seek the appropriate financial assistance to execute your financial goals. To our moderators, Mr. Danraj Hariprasad and Dr. Kieran Swift, thank you for expertly guiding us through what may seem to some of the new exporters as a labyrinth of financial pathways. To Ms. Rocio Medina Bolivar, Dr. Demi Sinanan, Mr. Kristen Maharaj, thank you for sharing with us the various ways in which your organizations have tailored your facilities to better assist SMEs on their export journey in the new normal. To Mr. Robin Lewis, Mr. Venus Frith, Ms. Natalia Ramatula, thank you for sharing with us the various ways in which the commercial banks stand ready to support firms in achieving their export goals. And finally, thank you, Mr. Chris Budu Singh, Ms. Maria Daniel, Mr. Mark Jardin, and Mr. Richard Lewis for showing us the untapped resources available through private sector funding. Thank you to Ms. Mandisa Grandison, our excellent MC, for the past 3 sessions. I mean, Mandisa has done a fantastic job moderating this entire event, and she also has played a key role in developing the content that you're enjoying here today. Finally, I have the most important persons here to thank you, our participants. Thanks for joining us. Thanks for giving us your questions. I mean, they really generated some rich dialogue and helped to extract the information that is needed by many SMEs like yours today. And with that, this concludes our seminar. Thank you so much. I wish you all a productive day.